Wow, in this economy, the number of consumers who have a vehicle where they maybe can't afford the payments, or maybe it's out of equity, upside down as they call it, is increasing dramatically. With inflation and the job market, many times a second vehicle or even a primary vehicle has a payment that's just not affordable. So what are your options? Can you do a short sale on a vehicle? Can you sell it to somebody and maybe have the proceeds pay off your loan, even if it's less than your balance owed? Are there any options that the banks have? We're going to take a look at all those today and what resources you have as a consumer to handle a vehicle disposition for maybe something you can't afford or don't need the car anymore. First of all, we're going to take a look at some bank policies, and here's a couple examples. This is a credit union, has auto loan hardship assistance. Wells Fargo, help with auto loan payments. Even Ally Bank, can I request a modification? So these are things we'll look a little more in depth. But as part of that, we're going to look at all the things that go into the highest probability of having a successful outcome with your vehicle short sale, your car short sale. First of all, car loans are regulated under many laws, and the CFPB, the Consumer Finance Protection Bureau, they're the federal agency that governs all this, and they have a list of all the applicable laws and regulations. The reason it's important to know these is because many times you'll find that your original underlying loan did not conform to these regulations. It may be void altogether. Now remember, we're not attorneys. We're not giving you legal advice. We're just pointing out the resources and factors you can use to try to erase or get rid of your car loan. First of all, the Truth in Lending Act. It requires that there's certain disclosures made, that payments are properly credited, and that the financial accounting of your loan is done properly. There's the EFTA, which talks about how, as a condition of loan approval, loan repayment through automatic payments is limited. So if you were told that you had to do automatic payments, that may be a violation. Fair Debt Collection Practices Act. This is a big one. This governs how your loan payments are collected, especially if there was this acquisition of your loan. If the original lender transferred it to somebody else, which many times happens if you buy from a dealership. A lot of times when you buy from a dealership, the original lender is the dealership, but then they transfer it to somebody else. The reason why it's important to get into the weeds on these is because sometimes leverage from violations of these will help you get a vehicle short sale. Fair Credit Reporting Act, that's the one that's ubiquitous. That covers pretty much everything. It prohibits the use of consumer reports for impermissible purposes. So if somebody pulled your credit report improperly or used it improperly, that's a violation. And there's other laws about disclosures and equal credit opportunity. Why are these important? Well, when it comes to getting rid of your car, if you can't afford it or don't want to afford it, obviously if you owe more than it's worth, that's going to be a problem. But you don't want to confuse a car short sale with a voluntary repossession. If you just give your car back to the lender and it's worth less than what is owed on it, you're going to still have to pay the difference. Let's say you have a car that is worth $15,000 and you owe $20,000 on it. If you just turn it back into the lender, you're not out of the woods. What they're going to do is they're going to sell that car for $15,000. They're going to apply it to your loan balance of $20,000, and they're going to come after you for the difference. They'll sue you. They'll do garnishment of your paycheck. It'll be a judgment on your credit report for a long time, and it's not as easy as it sounds. So you don't want to just turn it in. Plus, they probably won't sell it for the full value. They're going to sell it at a wholesale auction, a distressed auction, and it'll probably only sell for $13,000 or $14,000. So you lose out more that way. If the book value is $15,000, the trade-in, you can probably get $16,000 or $17,000 for it if you sell it retail. So now you're only a couple thousand, $3,000 away from your payoff. But what do you do with the difference? Well, many financial gurus will tell you borrow the money or get a loan for it. But you can probably get the lender to waive it if you do this correctly. How do you go about doing that? First, you have to put together a package for that lender with a lot of information. You're going to have to put together the value of the vehicle according to a book value and use a reasonable book, Blue Book, NADA, GALVS, any of the common online books. Then you're going to have to put together a financial disclosure package they don't want to be waiving your loan if you have $1 million in the bank. So you're going to have to probably show them your bank statements or your income statements. And then third, you're going to have to look at what that particular bank has for a procedure. When we put together a package, we're going to look at your particular bank if they have a procedure. If they don't, there's a generic package that we put together. You'll see it on the website of all the different elements that go into a car short sale. First, you'll need a condition report showing what kind of shape your car is in. If it's in poor condition or needs work, that'll help you. You'll need a vehicle evaluation report showing what the current book value is. You're also going to need an affidavit that who you'd be selling it to is an unrelated party. Look, they don't want to waive your loan if you're selling it to your cousin just to try to get out of part of your loan balance. You'll need a financial calculation sheet showing your employment, what your bills are, that you really can't afford to pay this. And you'll need some things like a lien release document for the lender to sign, an application for title for the new owner, and a few other kind of bureaucratic documents. The most important thing is you want to get an estoppel letter. An estoppel letter is showing that the lender has accepted this lower amount and they're not going to come back after you for the difference. And you want to make sure you get that, because if you don't get an estoppel letter signed, you're going to be on the hook for whatever the short amount is. These are important documents to include with that package that you present to the lender. In addition, part of what you want to use is all of these acronyms for these auto finance applicable laws. You want to let the lender know that you're investigating to see if any of these are violated. You don't want to accuse them of it because you don't know if it is. You're just going to put a standard statement that it appears that there may be possible violations of some of these regulations, and when lenders see this, they don't want to be involved with any kind of involvement with the federal government on investigations for these. So a lot of times, the advantage to the lender is this: if they know that the car's going to get repossessed anyways, let's say it's like we said, a $15,000 car that you owe $20,000 on. If they repossess it, they have to pay the shipping fees, the auction fees, all the transportation. The car might need repairs, so they're going to have to pay those before they can sell it. So they're going to get a lot less money for it than if you take care of all that for them. They don't have to have the expense, the management, the labor to do all those things. And you'll get more money for it. You may be able to sell it for 16 or 17, where they may only be able to sell it for 12 or 13. Even though they might think, well, we'll come after you for the difference, they know they're probably not going to get it anytime soon or ever, but they'll keep chasing you for it. So by having you present them on a silver platter a solution that you're going to sell it for $16,000, as long as they waive the difference, they don't put on your credit. They may put on your credit as a late payment or delinquency, but at least it's not going to be a judgment that you have to pay off the difference. So by referencing all these and showing them the convenience that you have this all tied up in a bow, they may go after it. How do we know that they go after it? Well, they mention it on even their own websites. Help with auto loan payments. Ally Bank, can I request a modification? You can find out if you qualify for a modification. They're not going to make it very obvious and hand it to you on a silver platter. You have to know how to ask for it. So using these as leverage, it's carrot and the stick. The stick is violations of rules. The carrot is we'll sell the car for you. In addition, there's other rules in play. This is from a law journal that talks about dealer markups. If you bought the car from a dealer and the loan was arranged from the dealer probably marked up the loan rate. So maybe you're paying a 10% APR on your car loan. The dealer probably got that rate at 8. They charge you 10 and they pocketed the difference. The loan rate that the consumer receives is not risk-based, meaning that higher markup had nothing to do with how risky your loan was. It was just profit for the dealer. That's a reason why you also want to notify the dealer that you're looking for at a short sale and mention the dealer markup. The reason you do that is because many times the dealer, because they don't want to be involved with any kind of claims, they may either kick in, they may buy the car from you, they may work with the lender to try to resolve it. You want to get everybody involved that can help you. The dealer, the lender, if there was a broker, if there was another lender that originally took the loan and then refinanced it, that's something you want to look at. So the short answer is you want to ask for it. You're not going to get it all the time. If you have really good credit and you have a lot of money and you have a good income, they may be less likely to work with you. Although this day and age, lenders are trying to alleviate delinquencies or distressed loans on their books. Another thing you got to realize is when a lender has a distressed loan on their books, let's say that loan of $20,000, that shows on their balance sheet as an asset. Based on that $20,000 asset, they can go get more money from their lenders. They can go do financing. They can do additional things with business growth. If that 20,000 comes off their books, not an asset anymore, then it cuts them deeply in terms of what they can do for their own capital reserves. And here's the thing, it's a factor of 5 because they can normally borrow 5-to-1 ratio of their assets. So if they have a $20,000 asset on their books, meaning that loan, and they borrow 5 times that, they can get $100,000 in cash, in capital, to lend out to other people, to do business development or other things for their business. If that loan becomes delinquent, that $20,000 loan becomes non-paid or 90 days late or some other problem, all of a sudden now they have to give back that 100,000 or they can't borrow the 100,000. So that 20,000 to them means a lot more than just on paper what it is of your loan. Plus, if you notify them that the value is 15,000, they might have to mark down their balance sheet down to 15,000 by law. So there's a lot of things going on behind the scenes. So the most important thing is to get this process rolling, get the ball rolling for requesting a vehicle short sale. Remember, requesting it doesn't affect your credit as long as you're making payments. If you're not making payments, it's already reported as late anyway. So requesting it in most cases is not going to change anything on your credit. If it's already bad, it's bad. It's not going to change that. Remember, we're not attorneys. We're not giving legal advice or financial advice. We're just giving you the ins and outs of how to do a short sale. There's more information at our website, carshortsale.com, that will walk you through the process. We have a service where we can prepare these documents for you. You still have to sign them. We can't sign your name for you. And we can even present them to the lender if you like. But there's a rhyme or reason to this that can help you get the highest probability of a resolution for your loan. Worst case scenario, the bank may not say, yeah, we'll just waive the whole thing, but they'll tell you, look, if you sell it for 16,000, that leaves a 4,000 difference. If you pay 800, we'll cover the difference, right? They can always come back with a counter offer. But most of the time they understand how much money you have and they want to work with you as best they can to keep these other problems happening to them that you may not be aware of, but they certainly are. If you have more questions, reach us on our website, carshortsale.com. We'd be glad to be of assistance.